Hey, what's going on? It's Thursday, March the 12th. um, so today was a market day. The market was open today, and I'm going to go over my trades. Man, today was like a whiplash day. Up and down, up and down. So not a good day for me today. But that comes with the game, unfortunately. So just going to go over that real quick. And my main idea for today is just being reminded that it's not always your fault. There are greater forces behind the scenes that make it hard for you to be successful on purpose. So this is my channel. This is my channel's description. I'm not a financial advisor. If you seek financial advice, seek a professional. I am only here to inform others of the potential of the stock market, the potential of trading, in particular trading options, and also the potential of not only the good part of it, but the not so good part of it. It's risky. But despite the risk, I strive for success. So there are going to be days like today where you seem to get nothing right, and it's not always your fault. So I constantly try to remind myself not to beat myself up. So today I'm going to show you the 3 trades that I took. First trade was Tesla. I bought it at $9.53. 24 contracts for an average of $3.60 each. It was a put, so I thought Tesla was going to go down to a strike price of $2.30. So to at least near 230, hit 230 or past 230 to the downside. It was a put contract. And today is March 13th. Not March 12th. So 9.53 to 9.57. So this was my only good trade for the day that kind of kept the day not being as bad as it was. So I made like $1,300 in these 4 minutes. Yeah, I know $1,300 in 4 minutes or $1,300 in a day. You could pretty much call it a day and be happy with that. But the honest truth about trading, you try to make the most of the trading day. You try to get the most out of the day, and you tend to trade more, which can work out for you, and oftentimes it doesn't work out for you. If you make money in that first trade, like I did, making $1,300 in 4 minutes, you have to have the mental capacity to say, okay, I'm done. Because chances are, as you keep trading, you'll tend to, especially as a beginner, you'll tend to wind up giving the money back that you made. So also, one contract is pretty much has like 100 contracts in it. So if you buy one, you multiply that by 100. So for instance, if I bought just one for $3.60 instead of 24, you multiply $3.60 times 100, and you'll get your price for that one option, which will be $360 each. And then you take that, the cost for that one, and then you multiply it times however many you buy, and you get your total price for how much you paid for it. And that's pretty much how you calculate it. One contract, $3.60. There's like 100 contracts within that one contract because it's a derivative of the actual stock. The option is a derivative of the stock. So 360 times 100 times however many contracts you buy. In my case, 24 times $360. So the market is still open. As you can see, stocks went down today. Tesla's market's still open, so the price is moving up here in the left corner. Tesla's still down like 3%. It was more than that. I already have my lines drawn up. I'll zoom in. These are 1 minute candles. Very quick trade. $1,400, and I was out. So as you can see, I missed this down move here. So I was in a put. Now look how far it went down before I even got in. Sometimes you wait, because sometimes this beginning of the day could be choppy, just small up and down before it make a move. Today it wasn't like that. It was just like pretty much almost a straight shot down. And you kind of like just wait and just get caught up in the moment of seeing if it's going to like bounce. It never did. So I decided to just get a little piece of the pie at the end of this down move before it came back up. Of course, hindsight, you wish you would have got in and I put in that whole move on Tesla, but I didn't. Just kind of sit there and watch it. And sometimes being patient works, and sometimes if there's a strong move like this, you want to realize it, because being quick about it was the best decision. So anyhow, I was in and out. This was the only good trade for the day. So second trade I got in was for Palantir. It was a call. 74 contracts, $1.19 each at 10:20 a.m. on March 13, 2025. So I was looking for a Palantir to go up to the strike price of $83 or pass it, or even higher than 83 to, make some gain. So to 1053 was how long I was in this trade. I sold them all, 74 contracts. Same one, 83 strike price. And I sold it for a loss from $1.19 to 75 cents. So I lost all my profits from my first trade and some. This trade is one of two examples of how the market always seems to do the opposite when you get into trade. And it's just like, all you can do is just shake your head in distress. I laugh about it now, but I'm not laughing at it in the moment. Believe that. So here's the chart for Palantir. As you can see, Palantir is down almost 4% at $80.31. The stock market is still open. It's not 4 o'clock yet, so people are still trading. Prime example of how soon as you get into play, and this is a 1 minute chart, by the way. Each candle is worth 1 minute. This green vertical line represents when I got in. And when you're in the call, like this Palantir call, you don't want to see red. You want to see green. And I sat here and I'm going to zoom out a little bit. I thought this was the bottom coming off 78.57. Back test and up. So when you're hesitant and you're cautious, sometimes you miss your opportunity. And then sometimes when you're not hesitant and you get in too quickly, you pay for it as well. So it's a balancing act, y'all. It's a balancing act. So just don't feel bad because you're not the only one when you say, oh man, I got in a trade. And as soon as I got in the trade, look what happened. 3 red candles. These are 1 minute candles now. So the next minute, after I got in my trade, it goes down on me. 1, 2, 3 red candles. Come back up, give me a little hope. Nope. It stalls sideways, come down. Come back up, give me a little hope again. 8108. Nope. Come back down again. And it's just like, in the moment, it's frustrating. Because you see it do this, like it's just about to go all the way back up, which was my target, this 200 moving average on a 1 minute chart. As soon as you get in, it gets stuck. It can't get above this line right here. And it's not by coincidence. And I'll get into that later. So, as you can see, I got out over here. I just got tired of waiting. I already lost my profits from my first trade. That was good. And I didn't want to hold it. I didn't want to hold it all day like I've done recently and just let it keep going negative on me and keep losing profit. Or increasing my loss because there wasn't no profit on this trade. I didn't want to wait for it. Like this little dash here, because the market is still open, this little dash red line that's moving up and down, that's price. That's the candles all the way over here on the right side. So it hasn't even made it back above where I got out at. So thankfully I got out because there was no point in holding this call because it's still around the same level right now where I got out at. So what I'm going to do is see? So it would have been an even bigger loss because it hasn't really moved. You see this? I just learned this is kind of what you call a drawdown. There's no really up movement where the candles go all the way up here, or there's really no further down movement where the candles go all the way down here. It's just choppy, no like big moves. What you want if you're playing with, a small amount of money and not millions or thousands. When I say like hundreds of thousands or millions, when you have small money, you want a bigger move like this down move here. All this other stuff, it's really just been going nowhere for the rest of the day. Probably could have got some money on a put instead of a call like I was trying to play, like right here. And see, I rejected off that. red line there, that 200. That's what I was expecting it to do after I got in right here, for it to go like that, but it didn't. So man, it's not coincidence that when you get into play, the moment you get into play, whatever direction you intend for it to go, or you think it's going to keep going, it takes a, a U-turn on you. To either scare you out or take your money, or another people that bought it here and here, caught, that caught that bottom, it gets there and they basically sell it. That's another thing too. But there are bigger powers that works behind the scenes. Power that has millions and millions of dollars to sell and keep the price from going above that level. So last trade, another example of how when you get in, it does the opposite of what you think it's going to do, of what it's been doing prior to you getting in. So I got in a put here. Like I told you, I'm just put call. It's just very volatile, very choppy. I bought 59 for $1.13 at 10.58. And then at 11.05, I actually sold those same contracts because I was trying to maintain my loss for the day. I didn't want to just hold on to a loser and wait for it to come back profitable. Although this would have done that, this particular trade here would have done that, because SPY did go down, but it went down after I sold it. So this is SPY's stock chart. Right now, if you wanted to buy one share of SPY, it would cost you $552. And here's my move here. I got into my put here. After I saw it rejected here, it came below, retested, and I saw this rejection, and I got in the put, which wasn't a bad strategy, except for when I got in right there along that vertical green line. The next candle, very small red candle, and look what happened. It goes up. Does the opposite, and these are 1 minute candles, might I remind you. It does the opposite of what I expected to do. And because I was trying to, pretty much got scared out, honestly. Got scared out. Because this is a 1 minute candle, so basically this shot up real quick, like in 1 minute. Right after I got in, not by coincidence. And that's a small move if you're buying the stocks, but I'm buying the options, so it's a larger move. Actually a negative $1,600 move right there. Those two green 1 minute candles that just shot up right after I got in. I sold here, and right after I sold, not by coincidence, one more little green candle, and look what it did. What I wanted to do. It went down. And when you're buying a put like I did here, you want to see red. You want the stock to go down. And right after as soon as I got in, it went up. Soon as I got out, it went down. It's like I'm a running back and I'm running on the field, and you got a back, and you basically you're the defense on the running back, and he does like a little juke move, or a little spin move on you, and just blow past you. That's basically what it feels like in hindsight. But like I said, it's not by coincidence. So I'm going to show y'all what I learned on the internet. It's called PFOF. PFOF. And let's Google it. I'm just gonna read what Google say. PFOF. Paid for order flow. Is compensation that market makers, the people with, like I tell you, behind the scenes with millions and millions of dollars, pay to brokers, which are the brokers we use, Webull, Fidelity, Charles Schwab, whichever one, Just very few. I think Fidelity I read, and you can Google it, but Fidelity I read don't do PFOF, but most brokers do. So payment for order flow, PFOF, is compensation that market makers pay to brokers for routing customer orders to them. They're allowing them to see when we get in, when we get out, where's the stop loss, where's the take profit order. They're allowing them to see the people that got millions and millions of dollars, giving them an advantage to see our orders. This is what Google is saying. I'm just reading what Google is saying. Rather than to a public exchange for execution. PFOF is essentially a rebate from market makers to brokerage firms for routing retail buy or sell orders to them. We are retail, the small people, small money. So when somebody's saying everything you do and they have millions and millions of dollars, is that an advantage or a disadvantage? You tell me. So Google says controversy. PFOF is a controversial topic because it's not always clear whether it benefits or hurts consumers, as brokers may be incentivized to route orders to the market makers that offers the highest payment rather than the one offering the best price for the investor. So whose best interest is at stake, or whose best interest is kept in mind by these brokers that we use to invest and trade? Is it the market makers or the investor? You tell me. But like I said, it's not by coincidence that when you get in a trade, it does the opposite of what you think it's going to do. Investopedia is a good source to just look up definitions and terms for the stock market, investing, trading. So, if you're wondering why, when you get into play, it does the opposite of what you think it's going to do, maybe that offers you a little more clarity on why, according to Google and Investopedia. So that's pretty much it for today. Man, that would have been a good play if I would have just held it. Instead of selling it here, if I would just held it 2 more minutes or 3 more minutes and saw that would have gave me confirmation to stay in 2 or 3 minutes. Patience. Patience is key. But where you get in and where you get out is just as important, if not more important. Because this put that I was in, 2 minutes later, did what I wanted it to do. And came down. That move right there is 100% move. But it faked me out right here. So it's not always our fault. We don't always, they call us dumb money. They call retail traders dumb money, but it's not always our fault. The game is, there's higher powers behind the scenes that make it hard for us. So man, yeah, that's it. I'm done. That's pretty much what I wanted to show y'all for today. Today I lost over $2,000. So we'll try to make some profits tomorrow and hopefully make it back. Time will tell. If you're watching this, please read this. If you like the video, like, subscribe, share, and click that notification bell. Appreciate anyone and everyone that's listening. And these are lessons that I record, not only to inform others and help others, but to keep myself, have some kind of catalog or archive to go back to and look at what I did right, what I did wrong, and what I can do better. Appreciate it. Everybody have a good day.